Welcome to the C-Suite Series presented by Channelchek and Noble Capital Markets. Noble is an SEC-registered FINRA-licensed broker-dealer and the source of the equity research available on Channelchek. Of the 6,000 small and microcap companies listed on the site, today we're featuring Palladium 1 Mining. Mark Reichman, Noble's senior research analyst covering the company, will be interviewing President and CEO Derrick Weyrauch. Afterwards, he will be joined by Michael Kopinski, Noble's Director of Research, to discuss the key takeaways. As a reminder, Mark's research is available at no cost on Channelchek. Just type in Palladium 1 in the top left Company Data section. And now, here's Mark and Derrick.
Welcome, Derrick.
Thank you, Mark.
Derrick, would you please share a little about your background and how you became affiliated with Palladium 1 Mining?
Sure. I'm a finance guy by background. My formal training is as a chartered accountant here in Canada. I was recruited into Palladium 1 about a year and a half ago after spending about 30 years in the international capital markets working in North and South America as well as Europe and Africa.
How did the other members of your executive team and board complement your leadership?
Well, as I said, I'm a chartered accountant or finance guy by background. The rest of the team are geologists. Peter Lightfoot is probably the most recognizable name. He's a industry consultant globally. He's an expert in magmatic sulfide deposits. 20 years his junior is Neil Pettigrew, our vice president of exploration, and the gentleman driving the detailed activities on the ground. And as well, the team's rounded out by Lawrence Ralston, also a geologist, has about 40 years of mining experience on a global basis.
For investors that may be unfamiliar, would you provide just a high-level sketch of the company's operations?
Yeah, we are an exploration development company targeting large-scale platinum group element deposits, also including copper and nickel, only in Tier 1 jurisdictions. We have 4 projects, 2 in Finland and 2 in Canada. Our flagship project is Palladium dominant. It's called the Latina Calissima, or LK for short. It is a PG copper nickel project located in north central Finland.
So what is driving the strength in palladium prices and other platinum group metals?
The unique chemical properties of platinum and palladium in particular allow for mitigation of harmful emissions in the automotive industry. Specifically, those metals are used in the automotive catalyst or the catalytic converter. Palladium is typically used in the gas-powered vehicle, whereas platinum is typically dominant in the diesel engine. And the increase in global demand for environmental controls, whether it be Europe, China, or otherwise, has really increased the demand. There's an ongoing evolution of requirements. If you go back, quite a few years ago, you might have seen loading in a particular vehicle or any one vehicle, maybe $30 per vehicle. Now that number is closer to $430 because of the escalation in environmental standards. And about 140% of global mine supply is actually consumed in just the automotive industry.
So how does Finland compare with other mining jurisdictions from where palladium and other platinum group metals are sourced?
Yeah, about 80% of palladium is sourced from relatively high-risk jurisdictions, whether that be South Africa or Russia. Rest of the world accounts for about 20% of global supply. Finland is actually the number 4 supplier of palladium globally, but it's as a byproduct of other mining activities, nickel in particular. And that's one of the unique things about the PGE space. There's, in particular, palladium. Only about 10% of global mine supply is as a primary product of the mine, whereas 90% is a byproduct of the other metals, predominantly, again, nickel and platinum. Therefore, existing producers are extremely constrained to add supply without affecting their fundamentals of their operation. And therefore, we're not seeing increases in supply to meet the incremental demand increases as a result of more stringent environmental legislation. And that's part of our thesis of why we believe developing a large-scale project in a Tier 1 jurisdiction should attract the interest of a number of larger companies.
Now, the LK project is your flagship project. What did your phase 1 drilling program accomplish, and what are the goals of your recently announced phase 2 program?
Yeah, so in September of 2019, we announced our initial resource on the LK project at the Kukua deposit. And when we started our phase 1 program in January of this year, our objective was to identify a number of additional exploration targets and do a lot of exploration drilling to try and zone into areas where we believe there would be higher concentrations of metals in order to define an economic deposit. And as part of that exercise, we got great success in the Kukua South area, so just south of where the existing deposit is. Hole number 6 that we announced in August of this year intercepted a very broad zone of mineralization that confirmed the IP chargeability anomaly that we had discovered earlier this year, and really opened up the door to our exploration activities. And in August and September, we drilled another 11 holes into Kukua South, covering an area of approximately 4 kilometers, so extremely widely spaced holes. But we had a 100% success rate and now have defined an over 4 kilometer long strike length. And we're now moving into the phase of phase 2 and infill drilling to define a resource.
Now, how do Mertolampi and Hockey Aho fit into the picture?
Mertolampi is only about 2 kilometers north of Kukua South, so it's really part of that whole Kukua project and or area, and we see that as an opportunity to have a satellite open pit beside the Kukua deposit that we have right now. Hockey Aho is about 11 kilometers to the south along that 38 kilometer basal contact that we have. So that's an area that we will spend more time on in the future. We have a great resource base of drilling information there that we can do some infill work on in order to create an additional resource. But right now our focus is just on Kukua area, Kukua South in particular, because we have a target of perhaps 100 million tons of resource in that area, which could provide us with a multi-million ounce deposit. And that's really how we see adding shareholder value with the least amount of risk in the quickest amount of time.
So what are the near and long-term goals with respect to increasing the scale of your resource base, and when would you expect to update the mineral resource estimate?
So we started about 4 days ago drilling the phase 2 program. We're already completed phase 3. And the phase 2 program is a 17,500 meter program, predominantly in the Kukua South area. And it's planned to provide 100 meter grid spacing over that 4 kilometer strike length. And that would provide us with enough geological confidence to perhaps create a resource at the end of that program. So in the short term, our focus is adding ounces there by executing this program. However, we will also do some additional exploration holes to continue to see how large this project could actually become.
Now, given the favorable pricing outlook for palladium and other platinum group elements, do you see interest picking up among companies interested in increasing or gaining exposure to the market?
Well, it's a great question, and the reality is that in the palladium space, outside of South Africa and Russia, there really isn't anything else that's palladium dominant, such as what we have here. And with inelastic supply, because of the lack of primary deposits globally, we think that there's more interest developing and will continue to develop because palladium has such a long future ahead of it as the environmental regulations continue to be more robust, and as well as we transition to hybrid electric vehicles, because they're still using palladium in the catalytic converters, and we see a very rosy future. So again, it's that balance of inelastic supply meeting inelastic demand, and we're trying to position ourselves right in the middle of that to take advantage of the situation on behalf of our shareholders.
Now, how would you characterize the company's financial strength and liquidity, considering Palladium One's anticipated exploration expenditures?
Quite good, actually. At the end of September, we had $2.7 million of cash, and based on the current share price, we have $8 million worth of warrants that are in the money as of September 30th, and those warrants are quickly being exercised right now. So our cash position is quite good. Obviously, our spend is relatively high because we have resumed a drilling program, but I think we're very well positioned for well into and perhaps beyond 2021.
To wrap up, what differentiates Palladium One mining from other Platinum Group metals exploration companies, and why is now a good time to invest?
The key thing is the nature of the project. So these are polymetallic projects. They all contain palladium, platinum, gold, copper, nickel, maybe some cobalt, maybe some rhodium. What makes us unique is that we have a 3-to-1 palladium versus platinum ratio, and there isn't another project like this outside of relatively higher risk jurisdictions. So for those seeking exposure for the most valuable of the 4 major precious metals, where we enjoy a $300 to $400 premium over the price of gold, I think the demand is there, and we see it in our trading volume. We have a very actively traded stock, and with a lot of eyeballs on it.
Derrick, thank you for joining us.
Thank you very much, Mark. Appreciate your time.
Well, Mark, I've learned a lot about palladium. What's interesting is that I'm not really familiar with the metal versus gold. I was wondering if you can just give us a comparison.
Well, sure. Palladium is used predominantly in the catalytic converter, so it's really considered a clean air metal. And what you've seen is increasing regulations, particularly in Europe, with respect to emissions, and also with the some of the events like what happened with Volkswagen with their emissions gate or their emissions scandal has caused many buyers to move from diesel to gasoline-powered vehicles, which has increased the usage or the demand for palladium. Now, longer term, as the market transitions to electric vehicles, that will impact the supply-demand dynamics to some extent. But hybrid vehicles also use palladium. So I think the key to kind of think about it is it's a very large market, and it's very supply constrained. In fact, most of the supply comes from Russia and South Africa. And so we expect that, in fact, the supply deficit has been going on, the metal's been in supply deficit for the last 8 years and likely, entering a 9th year. So supply demand fundamentals have been very supportive of pricing. Palladium traded below gold in the or traded above gold in the early 2000s, then dipped below, but then as the supply demand tightened, palladium prices actually started to go above the price of gold in kind of the 2018-2019 time frame, and now currently trades at a premium to gold. And so we just, given the fact that we expect the supply demand outlook to be tight, we think that palladium prices will maintain their strength for the foreseeable future.
I was kind of surprised that palladium is used in hybrid and electric vehicles. I mean, I would have thought that palladium used in catalytic converters, the whole reason for a catalytic converter is to improve the emissions for gas-fired engines. So can you explain why these electric vehicles use palladium, or what the dynamic is?
Well, they don't use as much. I mean, it's the hybrid vehicles that will use more of it. But in terms of like the electric vehicles, they do use copper, they do use nickel in the batteries, and while we kind of focus on palladium because of the price strength the fact that the project here that Palladium 1 is advancing is Palladium dominant, they also have exposure to many of the battery metals as well. So in a sense, they really have the opportunity to provide the supply to really almost any type of vehicle. But right now, the kind of the value driver for the company is Palladium.
And Mark, you made a lot of notes and mentioned about them not being located in tier 1 jurisdictions. I was just wondering maybe if you can explain that. Does it add risk to investors?
Well, Finland is, when we think about a tier 1 jurisdiction, we're thinking really along the lines of how the Fraser Institute in their annual survey of mining companies will rank them. And the investment attractiveness is really kind of the measure that most investors take a look at, and that considers, one, the mineral endowment of the country or the jurisdiction. In other words, how rich is the supply in that country and the grades, and then second is the policy regime, and in terms of, are they supportive of the mining industry? How long does it take to get projects permitted? And so it's really kind of policy perception of the country. And so Finland ranks very high in terms of investment attractiveness, as well as, I think, the policy perception. And so when you compare them to the countries where most of the palladium is sourced, like South Africa and Russia, clearly they have the mineral endowment, but not as friendly in terms of the policy or the regulatory framework. So from that standpoint, it kind of makes the Palladium 1's projects unique in the sense that they have a very attractive project in terms of the mineral potential, as well as the fact that it's located in Finland. And right now, there's just not a lot of exploration projects of scale, out there. And so that's why, we think that, that this project will certainly, as they advance it and they increase the scale of the project, that would be attractive to larger entities that would be interested in increasing their exposure to the market, or potentially moving it into production. But I think most exploration companies are really looking at kind of developing, de-risking a project, and then putting it in the hands of a larger mining company.
And Mark, we have a new administration coming in, and I know the Biden administration tried to raise fuel efficiencies, and it's probable, I would expect, that we would see another round of maybe regulations to increase fuel efficiency. Is this a good play for people looking to play the prospect of increased regulations and fuel emission standards?
I think it does. In fact, it's very central in terms of the clean air and the the green energy technologies themes. And obviously you look at the supply to batteries, but also, like you said, meeting the demand for palladium and platinum, to outfit the vehicles such that they can meet increasing or more stringent emission standards. And so, yes, I mean, this would fit right into that. But also, it's really kind of on a global basis, and it's, we tend to, as investors, kind of think about what's happening here in the U.S., but it's really happening across the globe. And so that's why we think that, demand will continue to grow stronger. And it is, like I said, such a large market, and it's very supply constrained. So we think it has a long runway.
Mark, thanks for introducing us to Derrick and Palladium 1 mining. I greatly appreciate it. Thank you.
Thank you.
This has been the C-Suite Interview Series, brought to you by Channelchek and Noble Capital Markets. Log in to Channelchek or subscribe to our YouTube channel to get the full catalog of C-Suite interviews and virtual roadshow channelcasts. Register for Channelchek's no-cost premium content and receive notifications of new releases from both series. Thank you for joining us.